Let me ask you something honestly. Do you have a little something going on the side? Maybe you're selling on eBay or Vinted. Maybe you're freelancing on Fiverr or Upwork. Maybe you've got a few thousand subscribers on YouTube and you're making a bit from AdSense. Or maybe you're just doing odd jobs here and there, a bit of tutoring, some photography, a bit of gardening. And somewhere in the back of your mind, you're thinking, it's not that much money. HMRC probably doesn't even care about me. I need to stop you right there, because HMRC absolutely does care. In fact, since 2024, platforms like eBay, Etsy, Vinted, Airbnb, and dozens more are legally required to report your earnings directly to HMRC, automatically, without you knowing. So the question isn't whether HMRC will find out. The question is, are you ready when they do? In this video, I'm going to walk you through everything you need to know about side hustle income and tax in the UK, the thresholds, the deadlines, what you legally have to do, and, most importantly, how to keep as much of your hard-earned money as legally possible. Stay with me, because Session 5 has a tip that could genuinely save you hundreds of pounds that most people completely overlook. Welcome back to the channel, or if you're new here, a big welcome to you. This channel is all about practical money, tax, and finance advice for everyday people living and working in the UK. No jargon, no nonsense, just straight-talking guidance you can actually use. Today, we're diving deep into side hustle income and UK tax rules, and I've structured this as a complete A to Z guide. So whether you're just thinking about starting a side hustle, or you've been doing one for a couple of years and you're not sure where you stand, this video covers you. I've added timestamps in the description so you can jump to what's most relevant, but honestly, I'd recommend watching the whole thing. Every section builds on the last. Right, let's get into it. Let's start with the most important rule, and honestly, the one that gives most casual earners a complete sigh of relief. It's called the trading allowance. And here's how it works. If your total gross income from your side hustle, and I mean gross before any expenses, is £1,000 or less in a single tax year, you do not have to pay any tax on it. You don't need to report it, you don't need to fill in a form, you don't even need to tell HMRC it exists. Simple as that. Now let me be really clear about one word there, gross. That means the total amount you received, not your profit. So if you're selling on eBay and you brought in £950 over the year, even if you spent £400 buying the stuff you sold, you're still under the £1,000 threshold. You're covered. Nothing to do. But the moment that gross income goes above £1,000, things change. And that's where most people get confused or, worse, get caught out. Now here's a nuance worth knowing. Once you're above £1,000, you actually have a choice. You can either deduct the flat £1,000 trading allowance from your gross income, or deduct your actual allowable business expenses, WAR. You pick whichever saves you more tax. If your expenses are only £300, take the £1,000 allowance. If your expenses are £2,000, claim the actual expenses. The flexibility is genuinely useful, and we'll come back to this in Session 6. So your gross side income crossed £1,000. What happens now? You need to register for self-assessment with HMRC. Self-assessment is basically the system HMRC uses for people whose tax isn't fully collected through an employer's payroll. If you're employed full-time and that's your only income, your tax is handled automatically through pay. But the moment you have additional self-employed income, you need to report it yourself through self-assessment. How do you register? Head to gov.uk and search Register for Self-Assessment. You'll need a government gateway account. If you don't have one, you'll create one during registration. The process takes about 10 minutes, but HMRC then posts you an activation code, so don't leave it until the last minute. What's the deadline to register? You must register by 5th October, following the end of the tax year in which you started earning. The UK tax year runs from 6th April to 5th April. So if you started your side hustle anytime between April 2024 and April 2025, your registration deadline was 5th October 2025. What happens if you miss it? HMRC can issue penalties for late registration. It's not always an automatic fine, but it creates complications, and the longer you leave it, the worse it gets. 3 key dates to write down right now. 5th October. You have to register for self-assessment, 31st January, file your online tax return and pay your tax bill. 31st July, second payment on account if applicable, more on this later. Seriously, put these in your phone calendar. Right now, I'll wait. Now let's talk about the actual tax you'll pay. Here's the key thing to understand. Your side hustle profit doesn't sit in its own little box. It gets added on top of any other income you already have, your salary, pension, rental income, whatever it is, and then your total combined income is taxed according to the UK's income tax bands. Here's how those bands currently look for England, Wales, and Northern Ireland. Up to £12,570. This is your personal allowance, zero tax, nothing. £12,571 to £50,270, 20% basic rate, £50,271 to £25,140, 40% higher rate, over £125,140, 45% additional rate. Now let me show you a real-world example, so this actually makes sense. Imagine you work part-time and earn £16,000 from your job. You also made £4,000 profit from your side hustle as a freelance graphic designer. Total income, £20,000. Subtract your personal allowance, £20,000 minus £12,570 equals £7,430 taxable income. Tax at 20%, that's £1,486 in income tax. Now here's where people panic. Wait, that seems like a lot. But remember, your employer has probably already collected most of the tax on your salary through pay, so you may only owe the portion that relates to your side hustle profit. The self-assessment process calculates this for you. Your job is just to make sure your numbers are accurate. And if your total income is already over £50,270 from your main job, every pound of side hustle profit gets taxed at 40%. That's a real consideration for higher earners and something to plan around. Right. This is the section I really need you to pay attention to, because this is where so many people get an unexpected bill. When you're self-employed, you don't just pay income tax. You also pay national insurance contributions, and there are two classes to know about. Class 2 National Insurance. This used to be a flat weekly charge, but the rules have recently changed. Now, if your self-employed profits are between £6,845 and £12,570, you don't automatically owe Class 2 NI, but you can pay it voluntarily for around £3.45 per week. And here's why that matters enormously. Class 2 NI contributions count towards your state pension and certain benefits. That's potentially thousands of pounds in retirement ink for the cost of a coffee per week. If you have gaps in your national insurance record, this is how you fill them cheaply. Class 4 National Insurance. Once your self-employed profits exceed £12,570, you automatically owe Class 4 NI. The current rate is 6% on profits between £12,570 and £50,270 and 2% on anything above that. So back to our earlier example of £4,000 profit, that's below £12,570, so no automatic Class 4 NI. But if your profits were £20,000, you'd pay 6% on £7,430. That's about £445 in Class 4 NI on top of your income tax. The point is, when you're setting aside money for your tax bill, account for both income tax and national insurance. A lot of people only think about one and get a nasty surprise come January. Let's talk about some specific types of side hustle, because the rules aren't identical for all of them. Renting out a room in your home. If you rent out a furnished room in the home you actually live in, you're covered by the rent-a-room scheme. Under this scheme, you can earn up to £7,500 per year, completely tax-free. That's a huge allowance, and it's automatic. You don't even have to apply for it. If you earn over £7,500 from a lodger, you only pay tax on the amount above that threshold. Important caveat, this only applies to your main home, and the room must be furnished. Renting out a separate property you own works differently. That's rental income, which has its own set of rules and allowances. Selling online. eBay, Vinted, Depop, Facebook Marketplace. Here's the nuance most people miss. Selling your own personal possessions, old clothes, furniture, electronics you no longer use, is generally not taxable. You're not running a business, you're just having a clear out. But the moment you're buying items with the intention of selling them for a profit, that's trading. And trading income is subject to the £1,000 trading allowance rule and everything that follows. And crucially, as I mentioned in the hook, since January 2024, platforms like eBay, Vinted, Etsy, and Airbnb are required to report your annual earnings to HMRC if you make more than 30 sales or earn over roughly €2,000 in a year. That's an EU-aligned rule now adopted in the UK. So HMRC isn't guessing, they have the data. This is probably the most practically valuable section of the entire video. So let's go through the legitimate HMRC-approved ways to reduce what you owe. 1. Claim all your allowable expenses. This is the big one. Any cost that is wholly and exclusively for your business can be deducted from your income before tax is calculated. Common examples include tools, equipment, and materials, business-related phone and internet costs, software subscriptions, home office costs, either simplified flat rate or actual calculation, marketing and advertising, professional fees, including accountant fees, travel directly related to your business. 2. Mileage allowance. If you use your own car for business purposes, visiting clients, making deliveries, attending events, you can claim 45p per mile for the first 10,000 miles and 25p per mile after that. This is HMRC's approved mileage rate, and it comes straight off your taxable profit. 3. Use your ISA allowance. If some of your side hustle income is going into savings or investments, make sure you're maximizing your annual ISA allowance, currently £20,000. Any interest or returns inside an ISA are completely tax-free. 4. Pension contributions. This is an underused one. Contributing to a private pension reduces your taxable income. So if your side hustle is pushing you towards a higher tax bracket, putting some of that profit into a pension could keep you in a lower band. Plus, you get tax relief on the contribution. It genuinely works in your favor. 5. Trading allowance versus actual expenses. Always compare. Remember from session 1, if your actual business expenses are less than £1,000, you're better off taking the flat trading allowance. If they're more, claim the actuals. Always do this comparison before filing. I want to flag something that catches a lot of first-time self-assessment filers completely off guard. It's called payments on account. Here's how it works. If your self-assessment tax bill is over £1,000, HMRC doesn't just ask you to pay what you owe for the past year. They also ask you to make advance payments towards next year's bill, right there and then in January. Specifically, they ask for 50% of your current bill up front as a first payment on account and another 50% by 31st July. So imagine your tax bill is £2,000. On 31st January, you'd pay £2,000 for last year's tax and £1,000 as the first payment towards next year. That's £3,000 in one go, in January. I've seen this blindside people completely, so please plan for it. Set money aside regularly throughout the year. A common rule of thumb, put 25 to 30% of every side hustle payment into a separate savings account and don't touch it. By January, your tax bill shouldn't be a shock. It should just be a transfer. Right, let's bring it all together. Under £1,000 gross, you're covered by the trading allowance. Nothing to do. Over £1,000 gross, register for self-assessment by 5th October. Your side hustle profit stacks on top of your other income and is taxed at your marginal rate, 20%, 40%, or 45%. Don't forget national insurance. Class 4 kicks in above £12,570 profit. Class 2 voluntary payments protect your state pension entitlement cheaply. Platform income is being reported to HMRC automatically. There's no hiding it. Claim every legitimate expense. Mileage, equipment, software, home office, it all counts. Plan for payments on account. Save 25 to 30% of every payment you receive. The main message, don't be scared of the tax system. Understand it, work within it, and use it to your advantage. The people who get into trouble aren't usually cheating. They just didn't know the rules. That is your complete guide to side hustle tax in the UK. If this video helped you, please hit the like button. It genuinely helps this channel reach more people who need exactly this kind of guidance. Subscribe if you haven't already. I post practical finance content every week, and I'd love to have you as part of this community. And drop a comment below. I'd love to know, what's your side hustle? Or if you have a tax question I didn't cover, ask it down there, and I'll do my best to answer. One final reminder, Everything in this video is general educational information. For advice specific to your personal situation, please speak to a qualified accountant or tax advisor. I'll link some trusted resources in the description below. Thank you so much for watching. I'll see you in the next one.